Okay, so before we get started with this one, I'm going to give a little bit of a warning. It is going to be a longer video for sure. It's probably going to take at least an hour for us to get through this. But the reason why, the why behind this is going to be pretty much everything, right? So at this point in time, we want to understand exactly what it is that we would be doing together in partnership, right? So if you ended up deciding to partner with Bootstrapper Capital, and we were able to underwrite your deal and take you on as a portfolio company, we want to be like super crystal clear in terms of what that looks like and the why behind it, right? We want to make sure that we're very much so on the same page up front from the beginning, super aligned, because everything that we do, we try to keep it simple. Everything that we align into is all about simple, profitable outcomes. And the core of what we're going to be doing here is to discuss how we align into the upside equity of your business, right? So when you work with Bootstrapper Capital, our number one focus is always to be able to build wedge equity in a company. I'm going to go through what wedge equity means in these slides in this presentation. This is very much so what I don't enjoy doing. I hate doing slides. I hate talking through this type of stuff. If you guys watch the YouTube channel, listen to the podcast, we've had conversations in the past, whatever the case may be, you probably already know that. But I do promise I'm going to try my best to keep it simple. I think after this video, we're going to try as a team to break it down into parts. So if you need to navigate it quicker, you don't have to sit and watch all, what could be potentially 60 minutes of content. I want to make it simple for you. And very much so, the intention behind this, the big why behind this again, is to get you the information that you need in a timely manner to be able to decide, make a good timely decision of whether or not it would make sense to continue to pursue or start to pursue, ideally continue to pursue a partnership with Bootstrapper Capital. So let's get on into it. And before we move forward, I do promise that, from this conversation, no matter what, our approach is always win-win-win, right? We look for win-wins, and no matter what, we want you to leave this with more than you started it with. And a part of that is going to be obviously the information that I provide first and foremost, but also like faith, goodwill, like inside of this deck and inside of the presentations, and then also probably linked to wherever you're getting access to this is going to be other things. Like we want to get you access to our operating system and some other resources and materials that you can actually use and put to work, and take some of the things that we're discussing today in terms of how you build up wedge equity in a business, and you can start to do that on your own, even if we don't decide to move forward and work together for whatever reason. This is actually our live, this is one of our decks that sometimes we'll use for advisory conversations. So that's why this slide's also here, and that's what I'm going through right now, just for, again, transparency purposes. And the other thing I'm gonna put a disclaimer and an asterisk on is, for those of you that watch the YouTube channel, I have a couple little kiddos, and right now I am home, and my kiddos are home and up. So you may actually hear them in the background. If you do, I apologize. But life is a real thing. It very much so is, and we get that, especially as bootstrappers, especially doing what we do with deals the way that we do it. It is what it is. So I'm going to just, apologize in advance if maybe my little boy starts crying or my little girl starts calling out for dad or whatever the case may be, because who knows. Second, I will keep it simple, right? This is going to be very, very keep it simple. It's super complicated in terms of what we're trying to do. I mean, at the end of the day, we're trying to endeavor to acquire your business, right? So, if you're not familiar, probably should start there. Bootstrapper Capital, we are a micro private equity firm. So we do build, buy, and sell simple, profitable businesses every single day. That's usually how we announce it: build, buy, sell every single day. We do that. So we look to buy companies, and this is how, very much so, we have found over time is a great way of doing this. This is literally what this is, and this is how we approach it. So, I'm going to try to pull back curtain as much as possible. I'm a big believer in more information. I'm a huge believer that your decisions are dependent on the information you have. Good, timely decisions requires the right information. and transparency is paramount. Especially, relationships matter. This is a relationship game at the end of the day. Hopefully a lot of what we do is repeat. A lot of what we do comes from referrals. So, relationships matter. You got to be transparent. You got to be upfront. You got to do things for the right reasons, and it's got to make sense. And we find that oftentimes taking something complex and making it super simple is the best way to just have a conversation. And even though we're not talking, I very much still want to have like more of a conversation as we work through this stuff. So the way that we pitch, I'm going to just get right into it. I don't need you to sit and wait for 40 minutes worth of content for you to learn how we do deals or make some sort of presentation of like what this would look like if we move forward. I'm just going to give it to you right up front. So the give and the way we structure deals is, first off, I'm gonna if you're not familiar, again, I'm gonna take this as like a 20,000 foot. You don't even know who we are, so I'm gonna give actual context before I go into this slide. So Bootstrapper Capital, again, we're a micro private equity firm. We call ourselves kind of like a poor man's Berkshire in a sense. We buy simple, profitable businesses, mostly with my own money, realistically, but we do also syndicate deals, and we're getting a little bit more sophisticated. We're getting a little bit more, not complicated, but more complex for sure as we continue to mature towards our journey. We're trying to build a $100 million portfolio, 100% in public, right? We do so by doing deals like this with folks like yourself each and every single day. And we also do advisory work and things like that too. So we do this with other folks. So the way that we structure, we invest. First off, typically we'll invest, then we'll look to buy and then build, and then we also advise businesses. Way we invest, we call it this thing called performance capital. So I'm going to get into that a little bit later in these slides too. It's just high level pretext. Performance capital, it was designed for bootstrappers. It is like what we believe to be the most bootstrapper friendly or aligned investment strategy that somebody like us could make with somebody like yourself. Whether you're bootstrapped or you're like maybe early venture stage or whatever the case may be, or, we made a very simple deal structure that's aligned to the upside on the investment side. And again, I'll get into it. There's a big why, and it's very intentional. We call it performance capital. We also have this thing called performance advisory, where we advise into businesses for the upside, and we align everything we do with that, the upside. So it's performance-based advisory. And then we have this deal structure, which we created called the SAFERR agreement. So it's a simple agreement for future exit and revenue repayment. So it's a mixture of our ability to buy it's an agreement to buy your business in the future, an option to buy, which is something that we created, and we tie it in and tag it in with our performance capital. So that's like context. That's how we do things. That's, if you're not familiar, hopefully now you are to a certain extent. Now I'm going to get into this slide, because we take all of those things and we combine them together for pretty much every single deal that we do. It's just a matter of like what, magnitude we combine them, right? So how much performance capital, how aggressive are we trying to make an acquisition, how much advisory, So we mix it all together, and ultimately what it looks like is the give. And the give is us investing a small, I actually brand it personally. I typically will throw it out there if I'm on a podcast as like a ridiculously small investment. Like we are not venture capitalists here. Again, most of this is my money, right? So like we're not out here with some, other people's money, $1 billion fund behind us. Like we're writing checks. And when we do everything, I feel it, we feel it, we're intentional. So it's like we invest a ridiculously small amount of money, but it puts us with skin in the game, and we are investing, in the business. So now you're a portfolio company, right? So now we can treat you like a portfolio company with all of the things that come with that, right? Not just like in name, but also with rights too. That gives us more freedoms for us to do what we need to do to get to the outcomes. So we'll invest a small amount of money into your business. You pay back our investment over time from a small percentage of your revenue, right? So that's the performance capital component. We give you money, you pay us back over time. We take our payback based off of a small percentage of the revenue. And ultimately, we give you what you need, primarily the performance advisory support, and then our infrastructures, right? So we have structures, strategies, accountabilities, like these very tangible things, which again, I'll get into in these later slides, that allow us to do what we do best, which is manufacture or create or unlock wedge equity. So additional incremental equity in your business, meaning like we'll make your business worth more, right? If it's worth 100 grand today, we'll help you make it worth 200 grand. Simple example, right? So we'll give you what you need to add another X amount of equity, and we commit to doing so. So most times in most situations, we'll put a guarantee to that we will do that. And that's a part of the deal, part of the deal structure. And we'll keep working with you until you do, right? Until you get that, with the goal, and pretty much virtually 100% of the time, unless like for some reason you are an outlier deal, which we tend to try to not to do those, because our core, like what we do, core ethos, like we look to buy simple profitable businesses. So a big part of what we try to do is to try to build the wedge equity so that we can then get into a good deal structure to acquire. So a lot of what we'll try to do is figure out a deal that makes sense so that we can approach this. We make a little bit of investment. We make your business worth more. And then on the backside, what we're trying to do is align into the goal of acquiring your business for more than what it's worth today. And we want to get it to a deal that makes sense, right? Again, not every deal gets done, and we try to set everything up to be a win-win-win no matter what. I'll get into how later in these slides, but for the most part, this is the give and that's the get, right? We're going to give some capital, and we're going to give the support and the structures, the strategies, the accountabilities, the advisory, the performance advisory services, in order to build up wedge equity in your business so that you get a more profitable business, right? More customers, better throughput, better revenue, realistically, less expense, better systems, better process, better profitability, and ultimately it's more valuable. And hopefully we'll have the chance to earn the opportunity, privilege to acquire you, right? So that's the deal structure. That's it right up front. If you're not interested in this, then don't take the remaining, whatever it's going to be, 45 minutes or whatever, to listen to the rest of these slides. If you think that that's an interesting approach, right, which we think it's so cool, it's so proprietary, it's so friendly, we made it so aligned for the upside, right? We're giving a lot up front. Everybody wins in the end. Like, we get paid back from the investment. So, we have some sort of financial gain, even if we don't do the deal. But unlike hiring an agency or an advisor or a consultant or somebody else, we don't charge you a fixed amount of money. We're not in it for that game alone. We have different economics, so we can make it way more friendly. We get paid back, again, a percentage of your revenue. So as your revenue goes up, we get paid. As your revenue goes down, we don't, right? So it's like very, 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 again, very flexible, friendly for bootstrappers, let alone any business realistically. And then the upside that we're aligned into is a more valuable business. And hopefully we have the chance to buy that business. So we're doing it for the right reasons. Now, where are we coming from? Like, this is the manufactured sense of urgency slide. This is the slide where I'm supposed to paint a picture of pain in a sense. But it's, it is what it is, right? So the reality is, and I think this is like an SBA stat, like a Small Business Association or administration, whatever it is, or like a SCORE, one of those organizations stat. We should probably have it like asterisk with the source or whatever. You can Google it. Most businesses fail. We know that. Pretty much most businesses don't exit, right? So if most businesses are failing and then only a small percentage of businesses exit, reality is most businesses don't exit, right? So the number one reason for companies failing, and this is pretty well documented, and you'd probably attest to this, is typically lack of capital, right? if it's a capital efficient business, if it's a good business, if it's a profitable business, then likely it's going to stick around, right? Likely it will either exit, like it's going to trade in some capacity, or it's just going to stay around. Oftentimes profitable businesses get handed down multi-generational, or they trade, they change ownership, they change stakes, and then at some point somebody messes something up. And then eventually over a long enough period of time, typically most businesses fail. Now, when you get to new businesses or you get into the startup space, these numbers are even more scary, realistically. Like, we're in the buy game. So like, we buy businesses because you have a higher probability. I think it's like a 70+% chance of staying in business if you buy a business, as opposed to like a 90% failure rate if you start a new business. So like, we are in the buy game because it mitigates risks. Everything we do, I'm not going to like promote entrepreneurship right now, but it's our belief system. It's our approach. It's a less risky approach to entrepreneurship. Everything we do is about mitigating risk. Because if you can get rid of risk, you can get rid of the downside. All you're left with is upside, right? All you're left with is reward. So we very much so focus on risk mitigation with everything we do, especially as a bootstrapper. You better be doing that. That's what we do best. And we focus on how you create and capture and unlock equity, because that's upside, right? Upside potential. So this is the scarcity slide. This is the pain slide. It's to get you scared about money and capital and all these things, because if you are afraid of capital, then you need capital. If we provide capital, now you need us, right? But that's, it is what it is. Many of the excuses, I use the word excuses. I had a part of creating these slides, and I think I actually wrote that sentence. Many of the common excuses include, and I'm asking, like, does this sound familiar or not? Because I do think that I think that things happen in life, and, sometimes it is what it is, but you always have the option to take action around it, right? So you can always you can't control everything, but one thing you can control is what you do or how you react, right? You can control yourself. Lack of action, I feel like, is really the number one company killer. I don't think it's lack of capital, to be perfectly honest. Statistically speaking, I think other people will put that out there in their surveys and stuff like that. But like, personally, from a belief system, I believe that it's lack of action, right? Oftentimes some of the things that we hear, and I don't know if you say any of these things, if you do, that's perfectly okay, right? Because life is a real thing. We're all in this journey. We're in it together. It is what it is. I've said all of these things myself. I'm probably saying them right now in one of our businesses at some place or another, because even though we do this, for a living, and this is what we've decided to become the best at, we also are victim to circumstances all the time, right? The market's a real thing. Environmental forces are a real thing. You can't control everything. Michael Jordan had an off day. You know what I'm saying? You can never be 100%. So it is what it is. If only we had more customers, right? That's like probably, that's what we hear the most. That's what I personally hear the most. I hear customers, I hear time, I hear money, right? I realistically hear money a ton. Like, if I had more money, I could do this. Like, if I had more money, I could buy customers, or I could hire this person who will solve all my problems in the world and all these things. If you're, from the Bootstrapper crowd, which is our core demographic, of course, Bootstrapper Capital, what we oftentimes hear instead of money and is time, because like, time is the constraint. And sometimes if you have to do everything, some of that is like learning how to do everything. And to learn how to do everything takes time. And then you have to get good at what you learn. And then you have to get good at what you learn fast enough to get results before you go out of business. So like, I think the number one constraint for bootstrappers is probably time. I think a subsidiary of that is know-how, expertise, right? The ability to get to outcomes fast. I think a subsector of all of these things is probably money, because if you had the money, you could buy time and outcomes. That's probably why a lot of folks raise money and things of that nature. Customers is a byproduct. Money is a byproduct of customers. If you had all the customers in the world, your number one source of capital should be your customers. But sometimes you need all these other things in place before that can even be a reality. And sometimes you don't know how to do that stuff, or you need some help, or whatever the case is. So these other excuses become, real things. And this is just me kind of talking through it, free thought. But like, I do think there's an order of operations. I think there's a why behind everything, Like if you talk to me, if we do things together, like, I like to ask the why. I like to get to the why because I want to know, like, what's up? Like, why? What are we doing here? Like, what do we need to get done? Right. I'm not going to read the rest of these things because I don't think I need to like create this sense on this conversation. But, hopefully some of these things resonate. And if they do, this is what we solve for. So this is realistically what we solve for. We look at these bullets and then we look at a business and we solve for the bullets in the business. Right. And a lot of it is that last one only had more help. Right. A lot of people can't afford the help. We created a structure. A lot of folks, like, they have good businesses, but they're not super appealing businesses to traditional institutional investors. Like I feel this all the time, honestly, myself, like probably a chip on my own shoulder. It's almost like what you have is not good enough for somebody else. And you're just like, oh man, I wish I could, I wish I was, or I wish I would, or they would, you know what I mean? And sometimes we just need a little bit of help, and that's a real thing, and that's perfectly okay. And it's definitely okay to feel that way. A lot of what we design with Bootstrapper Capital is to cater to that, right? So we have a really flexible, super, super friendly deal structure, capital structure, and approach. And we try to get aligned into the help that actually alleviates the constraints to promote the upside. And when we say upside, what we focus on is getting companies capital ready, right? So if the number one constraint is lack of capital, then the problem we solve for is getting capital ready, right? Like, again, like we're big believers in the why, like keep it simple. Simple is not easy, right? Simple works, but simple is not easy. And art of simple, right, which is like a personal passion project of mine, like learning the art of simple in like any type of industry or job or role. Like there's people who are just masters at what they do. And it's just like, why are they so good at what they do? Like, what makes you the Michael Jordan of X? And I'm like personally, passionately interested in that. And I always have been. I call it the art of simple. And I like to figure out how that happens. And oftentimes it's the pursuit of the why, and then just getting to the simple, realities of what matters, like what moves the meter quickly. So for us in this situation, what we believe, we have a belief system that it's getting capital ready. And capital ready means capital from your number one source of capital, which should be customers. So we want you to have more customers, and more importantly, more profitable customers. The second source of capital, if you can't get it from customers, is typically investors, right? So if you're not getting it from a customer, you got to get it from somewhere, because the money's either in your bank or it's not in your bank. If it's not in your bank, you're out of business. If it's in your bank, you only have so much finite. If you don't get more in your bank, you're out of business. Again, 90% of businesses fail. This is why. End up with no money in the bank. You either get money in the bank from customers paying you, more money in the bank, you stay open longer, or there's no money in the bank, you're out of business. Or other source of capital is investors, right? Sell a percentage of the business and you get money. We could also underline like debt and things of that nature associated to the investment side. All of that capital has a cost to it. And the cost is your terms, right? So what we try to do is get you capital ready so you get better terms. So you don't get beat up on terms, and you're more capital efficient. You're in a better position, realistically. And the other thing that you should always be capital ready for is the big reason why most folks are in business is to eventually sell at some point, right? You're either going to reap all the money and just pull cash flow out of it, but at some point you have all this equity that gets built up. You kind of want to get rid of that equity and liquidate, right? And then realize all these returns, real returns. So it's the concept of getting acquisition ready, which hopefully is a real thing. And hopefully we're the ones that acquire you, if that's something that you're interested in, or if that's a road that you're on. We believe that every business at some point should transact, because if you don't transact, the likelihood is you're eventually going to go out of business, and then you'll never get the opportunity to extract all that equitable value that you've been able to build up and harvest. So it's like, for a lot of reasons, statistically speaking, we genuinely believe, and I apologize for being rude of looking over, but we genuinely believe every business should transact at some point in time, right? So what do we do, and how do we do those three things, right? So how do we help you get more customers, more profitable customers, better terms from investors, better valuations for your acquisition. What we focus on is becoming, like, we brand it as, chief equity officer or whatever. That's like that's just a title. We could just be chief dishwasher or whatever, head janitor. It doesn't really matter. What matters is what we do and what we're the best at, and what we've decided to become the best at, because at heart, at core, we're bootstrappers. Again, we're bootstrapping a $100 million portfolio, 100% public. And what we've decided to specialize at and really become the Michael Jordan of is building and maximizing the equitable value of a business. Like, we specifically call this wedge equity. So we call this the edge equity in which you can create. So like what a company's worth versus where it's going to be. And the thing in between is the wedge. But we're just really good at looking at businesses and then figuring out how you can make it worth more money without destroying the company, right? So, there's folks that historically have looked at a company and then said it's more valuable, the broken up, selling off, pieces of assets is worth more than the sum of its, parts or whatever. We don't do that. What we do is we look at the business, and then we look at the essence of the company and the business system, most importantly, and we say, how can we actually position this to be worth more in the market? And when we look at the market, we look at the market makers, the buy side. So we're the buy side. So we look at, like, what does somebody on the buy side want? What are they paying attention to? And then ultimately, how do you focus in and extract as much value as you possibly can from that, right? Among other things. The answer there of, like, how do you extract as much value from that, or how do you manufacture that value? That's the strategy. That's like the market relations type of thing, right? So we'll focus there. We'll live there. We'll do that for you because we know how to do that. We'll partner in. And the byproduct of doing that typically is a design factor on the business system, right? And again, later slides, I'll get into the why behind these things and what they actually are. But the business system is important because it systematizes a company. It takes a company from a liability and turns it potentially into an asset. The moment in time in which you have a business system is the moment in time in which you could potentially hire folks to run a business, and you no longer have a job, you have an asset, right? So, like, systematizing a company is really important. Systematizing a company also puts in repeatable processes. It creates less variability, more sustainability, right? Which allows for better forecasting, better decision-making, better capital allocation, right? So most importantly, the capital allocation. Like, number one job of a CEO or a founder is really just being a great capital allocator, right? You want to make sure you're getting the best return on where you're putting people's time, human capital, financial capital, etc. Right? So we focus on system design. And then the other thing is revenue optimization, right? Like, the easiest way to make more wedge equity, build wedge equity, is like, pull the levers, the revenue levers, and just get more customers, make more money, you're worth more money, So we very much so simplified how you do that. And we got a lot of different growth strategies in place to be able to do it that we map out very, very clearly, and we know just work. So all of this, at the end of the day, in its whole, in its entirety, is pretty complicated, right? But it doesn't have to be, right? So simple isn't always easy, but simple definitely works, right? Simple works, just like systems work. Systems are kind of simple. You know how to, do something. You do one thing and put one thing in, you get one thing out. It's a system. It works, but it's not easy to build that system, right? Otherwise, everybody would do it. When we approach deals, we approach it from this playbook. We call it our simple profits playbook, right? Simple and profitable. And it's our playbook to get to simple profits. It's literally the byproduct of doing deals over a long period of time, like a very, very long period of time, like well over a decade at this point, doing lots of different deals, startups, starting businesses, building businesses, investing in businesses, doing turnarounds into companies, small companies, middle market companies, right? 100 grand, million, 10 million, 100 million, right? And it's all almost the same stuff. So what we decided to do is document everything, and we started to just document the things that we were naturally, the little nuances and processes that we were approaching when we would do these turnarounds and work into an organization to extract more equity. And then eventually off of documenting it, and by documenting, I literally mean like documenting like who does what, when, how, going through a process, a set process that extracts this equity. And we wrote it down, and that's a playbook. And then we followed that playbook, right? So now we have it documented. It's like 50 plus pages that we just follow. And then we have a system, an operating system that was designed and built around adopting that, or running that playbook. And then that becomes a business system. So what we really do is we launch a business system for you that we have built. I don't know if I'm able to just like pull it up right now. I feel like it would be really good if I showed you the business system. So here's the business operating system, and here's the business system. Right, so this is the actual business system. This is, what we built. I don't want to necessarily maybe go through this, but what we do is, so all of these are little sub databases. This is all built on Notion. So it's super flexible. We did that for a reason. We didn't want to design and build like a SaaS that then became this heavy thing. We didn't want to have to add another like subscription to folks. We wanted to be flexible, adoptable. The thing about systems is you can't force fit a system. So this is like a best practice framework. And then another big reason why we did it around Notion is because every deal, every business is unique. And we wanted to have something that was flexible and could change. So we wanted to have something that was a framework of a best practice, but then you could customize it and personalize it per unique business. And that's what we have here. Every single one of these things that we see on this page is all a unique database. Right, so you click into the company dashboard, for example, and it's just like this interactive thing, right? So pretty cool. It looks nice. That's cool and everything. It's awesome. But the reality is like there's a functional purpose for it. I'll actually jump back into the slides and show you. So when we do these things, we launch the lean canvas. We're going to design strategic OKRs. We're going to set up your revenue engine, right? Like all of these things that we'll do. And these are actual functional like workshops that we will workshop with you to implement inside of this business. But what we're really doing is we're just working through the business system, right? So like in our business model, we have the lean canvas here. So now you have everything that you need to be able to complete that, right? Let's go back into organize, like forecast on the one pager. This is literally us building out the long-term, short-term plan, and then building out objectives that can be broken down into annual and quarter, right? With focus points. These are all strategy workshop sessions that we'll design intentionally, right? Like, well, this is the stuff that we do when we get into, 8, 9, 10 figure deals to help them navigate things strategically, or late series or growth stage organizations and things of that nature. What's functionally successful there is also functionally important and successfully in the bootstrapping world and the deals that we do here. Oftentimes, this stuff is just stuff that just does not get done, right? Like it literally won't get done if you have like a $30 million business. It's probably not having. It's definitely not happening at like a 300K business. Reality is it's important because it allows for focus. So we'll workshop like OKR setting. Like, what is an OKR? How do you set objectives? This is goals and objectives, right? So goals being long-term, like 3-5 years. Like, why do you even exist? Then what are the objectives that are going to get you to these goals? Right? From the goals and objectives, then you have OKRs. So these are objectives. Now, what are the key results that get there? And there's a process and an approach to be able to design this stuff and make it super intentional. And again, it comes back to like the art of simple. We work through this. We work through each one of these. And ultimately, at the end of it, what you have is this due diligence checklist. We're going to be able to tell you if your company is due diligence ready, right? And then the byproduct of all of this work allows us to design a strategy that really actually will achieve the wedge equity that we're looking to in your business. More often than not, we start at 100K as the target. We want to build up 100K. But, it could be more, it could be less, right? Every deal is unique, but that's the goal. We're going to want to build up this equity. We do so by implementing the operating system. We do it very intentionally. It's a very tangible thing as well. And ultimately, once you have the operating system, you get to use the operating system because it's super functional and you can literally use it to run your business. It's what we use for our portfolio companies. Another big why, we're believers in the why. We believe that if we can do this early in the process with you to extract the wedge equity, guess what? Once we buy your business, if that ends up being the case, we already have an operating system. So our ability to then integrate your deal, integrate being like, now we take possession and now it becomes a part of our portfolio. In that situation, there's going to be terms that we negotiate when we acquire. Maybe you stay on as an operator, maybe you don't. Maybe we have to hire a new operator. Maybe we roll it up into an existing portfolio company and it becomes an integration within integration, right? Like there's all these various things that could and potentially will have to take place. We've done all the pre-work, right? So it's simple. It's very simple. There's a why behind all of it. And if we don't buy your business, you have an operating system. Like you have all of this stuff mapped out and you can use it and adopt it and leverage it. And because you have it, your business is more valuable. The reality is pull back curtain. Let's be honest. Just by implementing the operating system alone, you've added a tremendous amount of wedge equity to your business, because now all of a sudden your company is an asset. Right now it's something that somebody else can come in and run, right? Like it's crazy. It's fun, right? Deal making is fun and you can manufacture these deals and we enjoy it. We genuinely enjoy every part of this process. On top of this, you get all of these different types of again, growth strategies. We'll show you how to optimize the revenue engine, like all these very, 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 very cool and tangible things that we'll start to put to work after we set up the playbook. So the initial playbook is just to design how we're getting that additional equity. Once you have the playbook, what we'll do is implement the playbook and then optimize it. Implement and optimize means once it exists, now we need you to start using it. Either you start using it or somebody else uses it, right? Like either you're using it because it's your business, or we bought it, or somebody else bought it and they're using it because it's their business. But whoever's business it is at that moment in time needs to adopt it. So we have structures, strategies, and accountabilities in place to help you adopt the operating system once it exists, so that you can implement the playbook to get to the equity on the upside. That's how we achieve this stuff. By doing so, what we're going to do is simplify, and we're going to work towards getting more customers. So typically we'll align around getting you your next 100 customers. A lot of the structures and strategies are around getting your next 100 customers. Next 100 customers oftentimes also very, very closely aligns with that incremental 100K or more of equity. So there's a big why around that too. It's also super digestible and it's easy to manage. So next 100 customers is not like a huge ask or a huge task, right? In terms of the implementation optimization, we do want to become a somewhat part of your team. So you're going to get access to our community, right? And I don't think I'm going to show the community on this call because we have a whole nother orientation and we have a deep dive there. There's so much going on in it that it's just I don't want to derail this talk track and what we're working through in terms of the deal. But you'll get access to our community for our portfolio companies, which has a ton inside of it. But outside of our thing, we also want you to integrate us into your thing. So if you have a Slack, then you can invite us into your Slack channel. Or if you have monthly or quarterly leadership meetings, feel free to invite us into it or record them and we'll listen to them, right? We want you to feel like we are truly that chief equity officer or a chief equity advisor or an informal board of advisors or advisory board. Reality is most bootstrap organizations, most deals that we do, it's just them. There's no infrastructure. There's no support mechanisms. The things that larger organizations have for a reason, there's a why behind it because there's guidance that comes from it. A lot of organizations in our space, they just have it. So we want to be that, right? We want to fill that need. We want to do that for you. So we will integrate that way. Outside of that, it's all about implementation of the playbook and optimization. So it's retrospective. So like, what did you do? What worked well? What didn't? What are we doing that's different, right? So we run a cadence of retrospectives, and then it's optimization of revenue. So like once you implement the initial operating system and we ran through the playbook, then really all we do is switch gears into focus on revenue. It's the more button. We want more customers, right? You want more revenue. We want to be a more valuable business. And we're trying to do this all within a time frame of the term of our agreement under the performance capital. Because as long as you're under the performance capital agreement, which is us investing in your business and you're repaying us back from a percentage of the revenue, we have the option to buy your business. So like we're trying to like really do this stuff in a big, super aligned way. On top of the optimized, like the business stuff, we also will run more of like an investor relations and market advocacy role for you too, like traditional board of directors will. If you do decide to go the fundraising route and you don't want to sell, we'll help you make introductions. It's in our best interest to do so. If you do raise capital, then you'll pay us back and, we'll clear out of the cap table and simplify things, but rising tides raise all boats, right? So we want to be there for you. If it's not us buying you, it's us going to the market and finding other buyout targets, like other folks that would want to buy you. Potentially even finding deals that you want to buy. Like we could also integrate other deals with you and make you a bigger organization. So there are deals to always be done. And we want to be able to do that. So strategically, we want to be there to run partnership plays and introductions and things of that nature. So that's the core of it, is like slide 9 and 10. That's the major focus of like what we do from the performance advisory perspective. Again, focus around your next 100 customers, revenue wins, right? Revenue rules. So we're going to implement the operating system. We're going to optimize for your profitability. We're going to grow your top of line. We're going to navigate the waters of being capital ready. And then ultimately the byproduct of all of it will be more equity in your business, right? So that's what we're focusing on. And then we make it super tangible around your next 100. In terms of the keep it simple, again, super simple. We got the operating system. In the operating system are the structure strategies. And then through the community, we have the accountabilities, or through the one-on-one relationships, we have the accountabilities depending upon what our deal structure is. We're setting very clear goals from the playbook. Everybody has a role to play. We have processes to follow, and then we get to the outcomes, right? It's repeatable. It's something that works. It matters because it simplifies. It's going to make your business more valuable. It cuts down on waste. It cuts down on spend. It makes us more profitable, right? We can acquire customers cheaper, like all of those things that ultimately grow the bottom line. This is an important slide, so I'm not going to like breeze through it. I'm actually going to take a little bit of time. Everything we do is around risk reward, right? So from an investor's perspective, it's all about risk reward, right? And investors do not buy risk. Investors do not buy jobs, right? So the more risk you can take out of the deal, the more valuable your business is. Again, we maximize wedge equity, right? So I'm showing you how to do that. So investors buy assets. So our number one objective is to turn your business into an asset. We want to be converting you into an asset. We don't want it to be a job, right? Because investors don't buy jobs, right? We acquire the company. We are going to hire an operator to run the business, or we're going to integrate it somewhere else in the portfolio. So like, we don't want to buy a job. We want to buy a company that can be operated, right? So we need to build a company that can be operated. Same for any other investor out there. And if you want to get top dollar for your business, that's what you do. And we'll show you how to do it because we have our interests are aligned. Customers are always attracted to outcomes, right? So the outcome here that we position is more equity, right? A more valuable business, the potential for us to buy your business, right? The outcome being a more profitable business, right? So folks buy outcomes. They don't buy features or functionality or benefits. And that's something that we also take a lot of time in the initial implementation, the playbook, to work through from like a go-to-market strategy of like, what outcomes are you delivering, right? Customers want outcomes and they're attracted and appreciate experiences. That's why we get so many referrals. People talk so highly of us. We create a great experience, right? Hopefully even this video is a good experience where, I'm intentionally taking a lot of time to discuss all this stuff well in advance, way more than most folks. A lot of folks would just take the time to like try to position some sort of big offer and then try to pitch and close you, right? Like that's not how we do business, right? We believe in doing it the right way. What goes around comes around, right? We'll hopefully help implement that inside of your company as well. And then capital always flows away from risk and into simple, right? Away from risk and into simple. People want to find the best repeatable returns. So repeatable systems work, and that's why systematizing your business is really important. So when you think of us, right, I know we said equity advisors, couple of different things. It's like, think of us like an asset manager, but for your business, right? Or another way to think of us is like what a board of directors, the BOD, is supposed to be, right? Not all boards are, but they're supposed to be like this. Like they function for a reason. Like they're supposed to do this stuff. They're supposed to help you with strategy, right? How do you win, right? Problem solving, go-to-market strategy, all the stuff that we reviewed, the stuff that we do, the people strategy, the image, like the positioning, the finances, right? Systematization, like the stuff that makes your company valuable and maximizes value for shareholders. In this situation, typically it's just yourself in the bootstrapping world. But like the same reason why organizations are supposed to function like this at scale is the same reason why we did what we did in our market. And this is what we do, right? So we do this for the right reasons, better probably than anybody else. So again, a revisit. It's been a little bit of time. If you're bearing with me, I super appreciate it. We're probably going to speed this up when we do the video, and the Loom will be played at like 1.5 times speed because I feel like I'm talking a little bit slow. But again, restructure, review of the deal structure, right? So we are going to invest a certain amount of money in your business, performance capital, and then help you build a certain amount of wedge equity in your business, right? Wedge equity meaning like what it's now worth from where it was to where it's going to be. So you get a certain amount of equity, right? More valuable company. You're going to get more customers, likely, a better profitability, likely, simpler life, definitely, right? Because you're going to have an operating system. You're going to have a better business implemented, and that's going to be the byproduct of the better equity, right? What we get is paid back our initial investment, our performance capital investment over here through a small percentage, typically 10%, because businesses can sustain with the 10%. It's a healthy ratio we found, especially doing what we do. It's safe and it feels okay. Sometimes it's a little bit less depending on what your business is and if you can manage it or not. But we're going to underwrite everything and we're going to figure out what you can actually support in a healthy way, because in no way, shape, or form would we ever want to harm or hurt your business in this process. The whole goal is to make it more successful, more profitable, more sustainable. But we'll take a small percentage that goes up and down, right? So unlike an agency or a consulting firm or anything else out there who's like, you pay me this to do this, and it's a fixed fee, and you're either paying me every month, or an employee, you're paying me every month, or you're paying me upfront, whatever it is. We give you money upfront, and then we say, hey, let's take a small percentage of what we make, on an ongoing basis and get paid back as we build more equity. So you're literally buying a more valuable business over time through a small percentage of the revenue of that business. Super friendly, super, 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 super founder friendly, super bootstrapper friendly. I'll defend that forever. I think it's just such a good structure. And then the goal is that we will have the option to acquire your business for a certain amount. So an example of this, like here's an example deal. Today, your business is worth $100,000, right? We come to terms, like we believe based off of market preferences and rates that your company is worth $100,000. That's, what it is. And we agree on that. We'll invest $10,000 as an example, and then help you build another 100,000 in wedge equity. So we'll double the value of your business, right? With a $10,000 investment. So now your business is worth $200,000. You have more customers, better profitability, a simple operating system is implemented. We get paid back our $10,000. So we're just recouping that initial investment from a small percentage, 10% of your revenue every month until we're paid back. While we're getting paid back, as long as you're paying us back, we're in the term of the agreement. And as long as we're in the term of the agreement, we have the option to buy you for $150,000. That $150,000 is just simply taking the amount that we added, splitting it 50-50. You're going to get paid 50% more, $50,000 more than what it's worth today. We did all this work, helped you, etc. We have the option to buy it for $50,000 worth more than what it's worth today, and $50,000 worth less than what it's worth after we do this work. So you make 50, we make 50 in this deal. Super fair. That's typically how we try to approach the deal. Again, this is an example deal structure. Every deal is kind of different, right? But this is like a good parameter of what a target deal would look like, right? Super fair. Everybody kind of wins, right? I don't know. Show me a way in which we don't. Everybody wins. The only hair on the deal, like if you were to say, what's the catch, guys? Like, why would you do all this stuff and only get paid back a percentage? The only hair, and I'll call it out right now, is our initial 10K investment isn't all capital. So we also allocate services and goods as a part of the line item of that initial investment. You will get capital from us, but it's not going to be 100% capital of the initial investment. That's how we make it make sense. Our structure and the way we are as a firm, we can eat like the labor costs and other things. Like, it allows us to do this stuff, right? That's the hair. That's like the catch. That's the, but it isn't what it appears to be or whatever it is, because there's always that. So I'm just going to call it out. That's what it is. You're paying us back that because we feel like this is worth, realistically, when we discuss, when we position this to more middle market organizations, because we do the same deal structure more upstream and we pitch it. Typically what we'll do is we'll just sell actually, I'll go to this slide. Typically we'll sell the playbook design for like 25 to 50,000. We'll ask the business to pay up front. And then we take a percentage of that money. We make an investment and we provide the same services. We'll build up the equity and then we get paid back 100K. So like as we go more upstream to more middle market organization, this is the deal structure that we typically use there. So just full transparency. And we get this, right? This is what folks are like. That's a fair deal when we do it like that. So this is an example deal, and we think this is an extremely fair deal. But we did it like this for a reason, because it's very aligned. Hopefully this becomes a very simple yes. And a big part of the commitment here in this example situation is we will continue to work for free until we achieve that goal of adding 100K in wedge equity, right? So that's the guarantee. And as long as you don't beat us up on the terms and we don't go back and forth and we don't fall outside of our traditional structure, we'll put guarantees to everything that we do. So you know what you're getting before you get involved, and it affords us all the ability to make a risk mitigated decision and hopefully make a faster decision to do something, because we get the fact that this is a big decision, right? It's not like a small thing. So we're trying to take as much risk off the table as we possibly can for everybody, so we have the opportunity and privilege to do it, right? So we'll keep working for free. You'll keep getting everything you need until we achieve that goal. So you're pretty much guaranteeing, to a certain extent, as long as we fall within all the frameworks of our terms, that you will. Original slide, I said you're going to get something no matter what. This is access to the operating system. We already went through it, right? So you can also use it and adopt it yourself, right? If you wanted to move forward, this is going to be a form. It's a application that you need to complete. It's not super complicated. It gets you to the next steps. It allows us to start underwriting, right? So in our process, we're going to underwrite your business, make sure we can do the deal. We're going to position terms to you in an offer. And then if everything checks out, you sign it, we disperse the capital, and we get going. I'm going to go through, if you bear with me, I know this has been a long call, a long conversation, long video, but if you bear with me, I'm going to go through this whole process. I'm going to give absolutely all of it to you now so that you have it. There's no confusion of what's going on. You could always revisit this, reference it. So again, a quick recap. We make ridiculously small investments into simple businesses that we would like to make big offers to, right? Above market offers is probably what I should say here. Above market to acquire, right? So we want to invest in you today, small amount, so that we could acquire you for more than you're worth tomorrow. We've strategically structured our investments to result in virtually zero risk for your business while tapping into the upside potential of being a portfolio company. What does that mean? So we've tried to mitigate the risk. We try to make it a win-win-win structure, right? So I don't know how in this structure you could potentially lose. You end up with a better business, right? So say we don't buy the business, you end up with a more valuable business, a more profitable business. In terms of the fee structure, you can opt out, right? You just repay us the initial capital that we already gave you, and you can buy out of your option contract. So there's no downside there. Like we've really ring fenced this thing, so there's not a lot of risk. Like this is a pure play opportunity, and we'll make it better if somebody can point out how it could be better. We'll make it better. We want to make this like killer. We want to do a ton. We got to build $100 million portfolio. So performance capital, what is it? We already reviewed it, but it's consistent. It's a consistent percentage of your revenue that ebbs and flows. So typically we'll look for 10%. So we'll take a 10% of your revenue, but as your revenue goes up, right, we're taking 10%. And as it goes down, we're only taking 10%. So it's not a fixed fee repayment, right? So it's flexible like equity, right? Meaning like you don't have to pay a fixed amount of money like you would with a loan or some sort of debt note. There's no rigid payments. It's flexible like equity, but there's no equity, right? So we don't actually have equity in your business. There's no like repercussions. It's just a better, it's really revenue-based financing is what, it's structured as. It's just a better approach to everything, right? So if your company makes more, you pay us back faster. If you make less, pay us back slower, or don't pay us back at all if you're not making anything. Super aligned. We focus on the structure, strategy, and accountabilities, get you to simple, profitable outcomes. We do it through our operating system. When we hit those simple, profitable outcomes together, right, we'll execute or we'll have the option to execute on either a partial, meaning like we'll only buy a part of your company. Maybe you want to retain ownership, certain percentage. We do certain types of deals. Maybe you'll do a seller note carry forward, things like that. We'll get into that when the times come, or we'll do a total buyout. We'll just buy your business. Simple. We deliver on the profitable transformation, right? We do it through a mixture of the community, group calls, and also one-on-one advisory, right? So we got to get you the operating system, the playbook, and then you got to get it implemented, and then we need to get to the results, right? So we do whatever we need to do to make that happen. Investments are super simple, super aligned, very fair, and it's all around the getting to the acquisition, right? We'll set up the acquisitions that are often above market in terms of price. That's why we target a wedge equity. We'll try to negotiate something within that range. Ideally, we want it to be 50-50, but sometimes we do deals at different ratios. Because of that, we are 100% aligned, right? From the very beginning. We are in it for the right reasons. We all win in this scenario. We all have skin in the game. You have our money up front. We have your business, right? It's like we're very aligned. You're a portfolio company. And everything's around move the meter type of stuff. We want to get to more revenue, more profitability. We want it to be a better deal faster. That being said, we don't rush things. So even though we want it to be a better deal faster, we understand that good things take time. right? Because of the ebb and flow repayment, we don't expect to be paid back everything in like 3 months or 12 months or some structured amount of time. We know it will come as the business matures and as results come. So we're in it for as long as we're in it for. And as long as we're under the terms of the repayment, we have the option to buy your business. And it's, it is what it is. It's super fair, and, don't rush a good thing, but let's get focused and make things happen type of thing. So at this stage, again, your next step is you're going to have to submit an application. We will review your financials. We'll present you with an offer. We'll underwrite you. We'll hopefully make it pretty specific to you. And then you can sign and become a portfolio company. We'll disperse the capital, get a quick signature. As a portfolio, you will be a Bootstrapper Capital portfolio company. That's super cool. I think it's cool. I love it. Like, we're proud of our portfolio companies. We want you to be one. Hopefully we want you to want to be one, right? We want you to be proud. It should be a sense of pride. Being a bootstrapper should be a huge sense of pride, right? We put in the hard work. We do the stuff that other people don't do. Like, it's like pretty much like being like a Marine, versus being in the Army or something. Like, we're like this elite force, this elite fighting force that just is so versatile that we could pretty much do anything inside of a business and move the meter. Like, bootstrappers are the salt of the earth. Like, we make business happen. And I don't know, there's so many good things about it. So you'll be a portfolio company. First thing you'll get is your equity playbook. Again, we have the Simple Profits Optimization playbook. You'll follow the playbook. We'll work through it together. We'll build your equity plan. We'll implement your operating system. We'll get to the equity, to the outcomes, right? So it's all about building simple, sustainable, more valuable business. Once you have the equity plan, like, you're adopting the operating system. It's all about structure, strategy, and accountability, right? Designed to exit. You'll get access to the community. All of the things that I just discussed are in the community, so you'll have access to be able to get them. But then you're in the community. We have all these live calls going on. You'll be able to integrate with other folks. All of the resources are inside of the community. It's for portfolio companies. We've put a lot of effort into it, so I think you're going to appreciate it. It's not just like selling some, community or something like that. Like, a lot of the time we get guff, like, oh, you're an investment firm that runs a community. Yeah, we do, because it's a hyper efficient way of delivering value to portfolio companies and other people. Like, there's a lot of value in a community, and I'm probably going to go deeper into that at some point, because I think that there's something there. I think, like, for a number of reasons, there's really good economics and velocity of value that could get extracted. But yeah, a lot of people give us guff sometimes. But yeah, no, it's cool. We also have all these like really tangible solutions readily available inside the community. So like, this is a screenshot of the frameworks. Things that you pay a marketing or a growth agency like hundreds of thousands of dollars for, we give you, and then we also workshop live, right? So you get these frameworks. We have like literally step-by-step growth strategies, over 100 of like, do these things and get these results. These are all ways that we move the meter for revenue. And depending upon your deal, depending upon our relationship, some of them we'll do with you. Some of them you can do through a live setting. Some of them you do on your own, right? It is what it is. We'll figure out where your deal is at and what we need to do to get to profitable outcomes. Then we also have like, I don't know, we looked at all the things that ultimately would make a portfolio company save money realistically, or get more revenue, either save money or make money. And we've tried to accumulate all of these assets and put them inside the community. We also have these growth packages that, are part of the onboarding. I'll go through the onboarding in a little bit, but like, we made our onboarding a pretty, like, on itself, almost like a marketing package. We do have private AMAs and open mics and deal nights and all of these really, really cool things where folks just come on and are authentic and open and share the real and get to real outcomes fast. And, just like uncomfortably vulnerable type of thing. You got to get comfortable being uncomfortable, get comfortable being uncomfortable to get to some sort of like realization state. And we try to push that a lot. We do monthly retrospectives. So instead of you sharing an investor update with us, we ask you to do a build in public retrospective using the operating system. And that's a big part of how we scale accountability, right? So you'll do this. It's a part of your operating system. We really want you to do it. Sometimes for sensitive reasons, you can't. We get that, but we really would like you to. And by doing so, you'll help other people. And then you'll get to see other folks' updates. And then it builds more of a community. Like there's a lot of value that comes from that, right? So super cool. Peer-to-peer, right? We will set up, if you want, more of a peer-to-peer advisory board. Again, we will act as your informal advisory, equity advisory board if you want. You can invite us to your own stuff. But if you want to do more stuff in the community, you're full freedom to do that. And if you want a little bit of help matchmaking or whatever, make introductions, we got a whole team at Bootstrapper Capital that's like just dedicated to doing this type of stuff for you as a portfolio company. Part of that is also connections and capital. So it's like, we want you to succeed. We have a pretty large network, right? So we're always doing deals and people reach out to us with deals and, we network through, and we have a very large growing scout network and all of these interconnectivities, plus like our portfolio companies themselves. Like if you need something, ask in the community, you'll get connected. If it's like hyper urgent, we have this thing called the more button you can push, or you can get in contact and like, we'll try to figure it out. Like we want to help, so this is like some serious firepower that you could leverage. And if you're in a situation where you need to get in touch with somebody, there's a really good chance that we could help you get there. But like, we can't do that for everything. There needs to be a good reason, you know what I mean? But if there is, we'll probably get it done. And then as a portfolio company, once you are out of the term, right, whether we acquired you or you paid us back and you're no longer under the term of our performance capital, I mean, you could always get more capital, right? So you can always recycle capital and get better terms, and like we'll invest more and stuff like that with you too. But like once you are a true alumni, then you could be a limited portfolio partner. And if you want to start to co-invest into deals or do other things, you can. Super cool. And we're always open to new ideas here as well. How do we welcome you as a new portfolio company? So say everything we just went through sounds really, 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 really good so far. There's no real red flags that you're like, oh, I don't want to do this for these reasons. Even the scary parts feel okay, which hopefully is the case because we were really intentional with how we did this. In those situations, the next step is complete your application. Give us a few days to review it. We're going to then put some terms together. We'll get those terms in front of you. We'll get a call scheduled, probably myself. I try to actually review and pitch every, term agreement for the most part, and we'll figure it out. We'll try to make it make sense. You'll then sign it. You'll get the capital. Then you join the community, right? That's like instantaneous. You're probably already in the community, to be honest, part of this process. You'll just get access to the rest of the community. You'll then get into the boot camp, self-paced boot camp to start, getting your feet wet. And then you'll start to join the lives once you've adopted enough and you're farther enough along on your operating system, right? We'll schedule a podcast. It's either going to be with me or somebody else. We'll do a formal interview conversation. We leverage that to then turn into an editorial. We really use like AI to do this at scale. It's pretty cool. We're doing that with like a lot of content strategies. And again, we show you all this stuff because like we are always experimenting either ourselves or through our network with like a ton of really cool, creative little hacks and growth strategies and different ways of doing stuff. Turn into editorial. And then eventually, once you hit a couple of like basic milestones, we'll do a PR blast and we'll let everybody know that you're a portfolio company. We invested, where we're at, why we're excited. And it's a great little SEO boost. It's a great little, it's a great ego boost. It's a great profile boost. It's a great boost across the board. And it's all about simple terms, right? We want to work with your business, make it simple. And then we'll, the whole focus of that onboarding, it's all rallied around getting you to build your playbook, your simple, profitable playbook. So we follow 12 steps. Sometimes these change a little bit, but for the most part, these are the 12. These 12 steps are going to get you into the operating system. We do this pretty systematically. You're going to pretty much complete the organized section through either one-on-one sessions, live sessions, group sessions, or do it yourself. We're going to complete the strategy session. We're going to build and design a go-to-market strategy. We're going to review some financials. And we're going to get you into an optimization plan. And that's what we'll complete, right? We'll deliver that. We'll complete that. And then once we're there, that's when we're going to just kind of like get into how do we make it, more? How do we hit the more button? So that is that team. Again, what I'll do is I'll actually scroll back up to this slide because I feel like this is probably the most relevant to land on. If you want to do the deal, this is how we'll do it, right? We'll invest a certain amount of money. We'll help you build to a certain target wedge equity. You keep the wedge equity, you get the better business with the hope that eventually, we have the option to buy you for a better deal, right? Super, super simple, super favorable, super on the upside. If you want to get this done, next step is to submit the application. In the community is an onboarding and like a welcome orientation type of process. You could find a lot of this stuff there. And also through email, you can get in touch with us. Whatever you need to make this step happen, do it, right? Like you're a bootstrapper, you're an entrepreneur. If we're doing a deal, we trust that you're competent, like make this thing happen. We are excited about this. We really put our best foot forward with all of this stuff. We're very confident in what we're doing. We're confident that if we're able to work together, we'll structure the terms to make it make sense. There's always a deal to be done, and there's always the more button to hit, right? It's just a matter of now the ball's kind of in your court. You got to hit that more button. Let's figure out how to make something happen and partner together. Look forward to their side.